In this lecture, we'll dip our toe in the arcane language of financial reporting. We're not going to become experts by any means. We just need to feel more comfortable watching the news and talking with financial professionals. Some investment guides advise you to learn how to analyze a corporation's financial statements. I disagree with that. The reason is that you'll probably spend a lot of time trying to learn stuff that won't help you with your investing. Let me explain. First, there's realistically no way that you'll get good enough at analyzing financial statements to do even rudimentary financial analysis. An old story involving the Schaefer Brewing Company illustrates the point. A professional analyst had spent countless hours studying Schaefer's financial statements. Finally, he reached a decision. He thought Schaefer was a good buy. His boss asked him if he'd investigated one single line of the multi-page financial statements, intangible assets. You may remember from Lecture 2 that intangible assets are things like brand names. I used the name Ferrari. No, said the analyst. He hadn't checked. Schaefer reported that it owned intangible assets of something like $20 million. Some of you may remember Schaefer's jingle. Schaefer is the one beer to have when you're having more than one. It turned out that Schaefer was claiming that that jingle was worth $20 million, which just seems silly. So the analyst changed his recommendation and they didn't buy Schaefer. Now, this was a high-level professional who'd spent hours analyzing Schaefer, and he didn't know to check this before making the decision to buy. Most people who tell this story think that the point is something like pay attention to details or check everything. That's good advice, but I think it misses the real point for people like us. The story might tell us something about the pitfalls of analysis, but it doesn't tell us anything about whether Schaefer was a good investment. Maybe the company was priced so low that it was a fair deal, despite the problem with the intangible asset. No, our goal is not to find good companies. Our goal is to find good investments. A company with lots of debt and declining sales might still be a good investment if the price is low enough. A great company with wonderful prospects might be a rotten investment if the price is high enough. Most people agreed that Apple was a great company in late September 2012. The disagreement was whether it was worth $700 per share. That great company, and it is a great company, was trading around $525 by November 2013. Yes, a great company was a horrible investment in September 2012. So why spend any time at all on financial statements? The answer is that we need to understand the language and concepts of financial reporting. When Jay Taparia, the founder of Sanskar Investments and Tax Services, was a visiting professor at the University of Illinois at Chicago, he wrote an article casting corporate financial statements in terms of our own more familiar personal finances. He suggested that we think of a corporate balance sheet as a mortgage application, a corporate income statement as being similar to our personal tax return, and the corporate cash flow statement as our checking account statement. Let's look at these three financial statements in a little more detail. If you've ever applied for a mortgage or other loan, then you have a pretty good idea of what a corporate balance sheet looks like. Your application was a snapshot of your financial position. On one section was a list of things you owned, and in another section was a list of things you owed. Lenders want to see whether or not you'll be in over your head if they give you the loan. A corporate balance sheet is a lot like that. It lists the company's assets, what it owns, on the left side, and its liabilities, what it owes, on the right side. I like to think of the balance sheet as the answer to the question that the company's owners and creditors always ask. What did you do with the money we gave you? Let's say somebody loaned the company $1 million